Suppose you invest 1000 in the stock market. Do all 1000 get invested into shares? Exactly no. Small amounts are deducted as taxes and charges. Many beginners see these deductions and wonder who took my money? The broker, the government, NSE, SEBI. Today, we will understand every important stock market tax and charge in India. And keep listening until this video end. You can get some information. And who are new to this channel, so please subscribe for more shorts and videos. Now, part 1. Who is involved? Before understanding charges, let's understand the people involved. So first, investor. That's you. You buy and sell shares. Second, broker. Examples: Angel One, Groww, Zerodha, Upstox, etc. The broker places your order. Third, exchange. So examples: National Stock Exchange, NSE, and second, Bombay Stock Exchange, BSE. So the exchange matches buyers and sellers. Fourth, SEBI. So SEBI means Securities and Exchange Board of India, the market regulator. Fifth, government. Collects taxes such as STT, GST, and stamp duty. Part 2, brokerage. What is brokerage? So brokerage is a fee paid to your broker. Think of it as a service fee. Without a broker, you cannot directly place orders on NSE or BSE. Who gets brokerage? The broker. Is brokerage a tax? Exactly no. It is a service charge. Important: many discount brokers offer zero brokerage on delivery investing, fixed charges on intraday and futures and options trades. And part 3, STT. So full form: Securities Transaction Tax. Who receives it? Government of India. Why was it introduced? To tax stock market transactions. Typically, equity delivery rate: buy side 0.1%, sell side 0.1%. Example: you buy shares worth 1000, STT on buy side 1000 into 0.1%, so becomes 1 rupee. So when selling, again approximately 1 rupee. So important: broker does not keep STT, government receives it. Part 4, GST. So full form: Goods and Services Tax. So current rate 18%. Many beginners think, I invested 1000. 18% GST means 180. So it is wrong. GST is not charged on share value. GST is charged on brokerage, exchange, transaction charges, some service charges. Example: if service charges total 10 rupees, GST 18%, it becomes 1 rupee 80 paisa, not 180 rupees. So it is one of the biggest misconception. And part 5, exchange transaction charges. Who receives it? NSE or BSE? Why? Because they provide trading infrastructure, servers, trading systems, order matching. Typically rate is very small and varies by segment. For equity cash segment, it is only a tiny fraction of the trade value. And part 6, SEBI charges. Who receives it? SEBI. Typically rate 10 per crore turnover, which equals approximately 0.0001%. Very small. Example: 1000 transaction. So SEBI fees is almost negligible, yet it appears on your contract note. Part 7, stamp duty. Who receives it? State governments through a centralized collection system. When charged, mainly on the buy side. Typically equity delivery rate 0.015%. Example: 1000 purchase, stamp duty 1000 into 0.015% equal to 0.15 paisa. We can say directly 15 paisa. Small amount but legally applicable. And part 8, DP charges. Many beginners don't know this charge. DP full form: depository participant. Examples: Angel One, Zerodha, Groww. Linked to national securities Depository Limited, NSDL, Central Depository Service Limited, CDSL. When they charged? Usually when selling delivery shares. Who receives it? Depository and DP. So this is why people often notice charges even when brokerage is zero. And part 9, complete 1000 journey. You invest 1000, money gets divided, broker gets brokerage if applicable. Keep it in mind. So government gets STT, GST, stamp duty, and NSE BSE gets exchange charges, and SEBI gets regulatory fees. Depository gets DP charges on eligible sell transaction. The remaining amount is used for your investment. And part 10, so delivery investing. Suppose you buy shares and hold them. Common charges, brokerage depends on broker, STT, GST, stamp duty, exchange charges, SEBI charges, generally cheaper than active trading. So part 11, intraday trading. So buy and sell on same day. So charges apply on both sides. More trades, more costs. Even if you make profit, charges reduce net profit. Part 12, futures and options. Many beginners focus only on profits, but futures and option traders pay brokerage, GST, STT, exchange charges, SEBI charges, stamp duty. If you trade frequently, charges can become significant. And part 13, taxes versus charges. This is extremely important. Charges paid for services, example brokerage, exchange charges, DP charges. Taxes paid to government, so example STT, GST, stamp duty. And part 14, capital gains tax. So this is completely different. You don't pay this when buying, you pay it on profits only. When selling and filling taxes according to current income tax rules. So two types, STCG and LTCG. So STCG means short term capital gain. So LTCG means long term capital gain. So if you want about to talk about STG or LTCG, so you can comment below. Maybe I can do a separate video for that. So it is a totally different. So how it works, I can show you some graphs. You can understand clearly. If you want, you can comment below. And part 15, dividend tax. Suppose a company pays you dividends. Dividend income is generally taxable in the hands of the investor according to applicable tax rules. And part 16, biggest mistakes. Mistake number 1, ignoring charges. Mistake number 2, over trading, more trades, more charges. Mistake 3, thinking broker keeps everything. It is wrong. So money goes to government, exchange, SEBI, depository, broker. So mistake number 4, confusing STT with capital gains tax. They are different, as I said. So if you want, you can comment below. Maybe I do a separate video for that. And final summary, so whenever you buy or sell shares, several small taxes and charges are involved. So government, STT, GST, stamp duty, broker, brokerage, NSE BSE, exchange charges, SEBI, regulatory fees, NSDL, CDSL and DP charges. Understanding these costs helps you calculate your real returns. A smart investor does not just track profits. A smart investor also understand where every rupee goes. So I think you understand. So however, this is all about taxes and charges in the stock market in India. So I hope you understand. So however, thank you so much, and Jai Hind.